on earth do we talk about this collaboration in the fractured times that we live in now? I mean, think about what we're all going through. And I've been wrestling with that with the 3 minutes that I have. And the fractured nature of whether or not you're Gen X, Gen Z, which generation you're from, whether you live in a red or blue state, whether you're red or blue, whether you live in a blue city in a red state. This fractured nature is stressful, and it is putting members, consumers, they're living in such challenging times. And I think it's an amazing time and an amazing opportunity for credit unions to come together in community development. And credit unions really have to stand and deliver to diverse communities. The diverse communities and their needs are very, very different. I am the child of credit union people. My parents met in the 60s in the Department of Agriculture's credit union. My parents and I have all served credit unions together 150 years. And I think of the challenges across our generations. And I think that what I hear from my parents is that we still have to find ways to take the diverse needs that our members have, and we have to stand and deliver to them. We have to be genuine, we have to be trustworthy, we have to be innovative, and we have got to go out there and really listen and really find ways to help solve real problems, real economic problems, real family problems, real personal problems. And we've got to be able to do it in a genuine way that takes folks out of the fractured feeling that they have right now and makes them feel part of something. And I think credit unions have always been a uniter, and they've always had a power to do something special, even in a economic banking format that starts to glaze folks over. But if we talk to people at where they are, and if we find ways to solve those problems with them, not for them, but with them, then I think credit unions and their future is bright, even though the fractured times we live in are so stressful and so difficult. Be kind to each other. I think that's what I want to leave with, is because I think no matter what your views are, this is a time to be kind and stand and deliver to consumers in this country. Thank you.
Next, welcome Neetu Bhagat, Chief Financial Officer with Origins.
Hi, everyone. Aren't we having a great session? The topic we got was collaboration. Collaboration is not something new. It's part of the credit union DNA. You know, we've built the credit union movement on cooperation, not competition. So what has changed in our environment? If you look at where we stand today, are we saying the meaning of collaboration still stays the same? And we have to look at it. So, you know, if you look at our past successes, the legacy has really played a big pivotal role in our successes. I think when Keith had come here, he had talked about Cuddle, and I can speak about that as a great example of what collaboration can do for credit union. When Cuddle was first formed, it was created as a platform to enable credit unions to offer financing at dealers where they were not yet available back in 1994. Today, Cuddle, which is powered by 1,200 credit unions, is the nation's #1 auto lender. That is the power of collaboration. That is how credit unions have rolled in the past. But the question that stands in front of us today is this playbook still enough? The answer probably is no. Why? What has changed? The world around us has changed. The consumer expectations have evolved. The technological advancements that are happening have accelerated. The competition has intensified. And the biggest, the most important distinction is collaboration. The meaning, the definition has transformed. If we sort of look at the challenges that are facing credit unions today, based on market pulse data, 63% of the credit union leaders cite member growth as their biggest concern. 30% struggle with legacy system. 53% of credit unions are struggling with lack of integrations in systems and applications, and 60% of all financial institutions are facing increased fraud. How do we solve these solutions in this day and age? Is this something that we can solve easily? To do that, the only way is to create integrated platforms and solutions that can accelerate credit union growth, that can accelerate efficiency and member experience. For that, we need a space where partnerships can be created without limitations to legacy systems, our belief system, institutional silos, comfort zones, our egos. And we have to create a space where credit unions, credit union leaders, fintech innovators, and community advisors can come together in a meaningful way to create solutions that are agile, that are inclusive, and are also future ready. As I look at, where we stand today, I feel like the way we would succeed in the future is if we all embrace this new definition of collaboration. We come together in a meaningful way to create partnerships that create successful solutions for credit unions to be ready in the future. So I invite all of you today to look at this new vision of collaboration and be bold, take risk, and try to, kind of look at the new world in a different way than where we have been in the past. Thank you.
Now, welcome Steve Castagna, Chief Revenue Officer from Akuvo.
Good afternoon, everyone. So Akuvo is a 5-year-old CUSO, proudly a part of CUS, serving over 160 credit unions. I'm going to take you on a bit of a journey that we've had over the past year and a half. A year and a half ago, we launched a new product or a new platform called Virtual Collector. When we released it, we had 1 or 2 customers that are on it, but since then we're up to over 50 customers utilizing that platform. We spent the better part of this year collaborating with those customers and understanding how are they utilizing this platform. A month ago at our conference, we sat down, we learned 3 key things that I want to share with you because I think it's good in terms of collaborating, but also looking at practices that they've had in past for 20 and 30 years. How are these new findings challenging what those practices and those strategies are? So the first was the cost. Virtual Collector allowed our customers to serve their members, and for every dollar that they were collecting, it cost them 1 penny with our Virtual Collector. The second was in resourcing. And what I mean by resourcing is Virtual Collector for all those 50 customers has quickly turned into the #1 collector with a very large margin until the second collector. So it's allowed our customers to now rethink their resourcing needs. How do I now take my resources that I traditionally had in early, mid-stage collections and start moving them into later stages? And the last is the member behavior, and we've talked a lot about that today. But with member behavior, now we have the analytics and we have the understanding and the data that allows us to take a look at what's more effective: texting, emailing, even phone calls with a customer or member. How do we use that to challenge the strategies that have been in place for so long and work together? So a month ago, we were at our conference, and instead of myself and others getting up on stage and talking a lot about what we're doing with our vision and the roadmap, we did that. We allowed our customers to get up and talk about how they're changing their strategies. And that collaboration with this wonderful industry was paramount. It was a beautiful conference in that people were sitting back understanding how the change is impacting each of them and taking that back to their own base and understanding what change can they affect within their own institution. So what I'll leave with each of you is, as we continue to collaborate, and I loved how they said it earlier, your partner, not your vendor, but how you partner with your institutions and really learn how to collaborate with each other. Let's work together so we can help design our future together. Thank you very much.
And now, please welcome Debbie Landries, Managing Director at EY.
Hello, everyone. I'm here to tell you that I have based my career on understanding the international capital markets, the history of banking and associated crises, and the relationships and behaviors among participants and players in this game. And I can say right here, right now, without a doubt, this is the most pivotal time in recent history for us to redefine the rules of the game with humans, yes, I said humans, not robots, with humans still at the center. And I think it's time to level up and level the playing field with talent. The last 15 years has been filled with an abundance of work for small, medium, large, and extra large, highly regulated banking institutions as it relates to risk management and transformation, mostly in response to the regulatory agenda. The 2008 crisis did put a few banks out of business, but for the most part, it put everyone in the industry to work. There was Dodd-Frank, there was countless new public rules issued over a decade by old and new regulatory agencies, targeted exams, many matters requiring attention, plenty of consent orders, and some big juicy scandals and fallout among many executive management teams. The work has been hard and incredibly high stakes, but it developed an entire class of professionals that work willingly across functions, spending nights and weekends in the trenches, enduring large amounts of stress and chaos, focusing on common goals, building incredible bonds and networks, and fueling the industry's boost in change management, business process redesign, and operational control. But now, right now, we're seeing just how incredibly burnt out and exhausted this entire talent pool truly is. And combine that burnout with a few more banks that have recently gone under, the rise of competition from fintech and banking as service players, disruption of AI and digital assets, a wave of new M&A, and now vast deregulation of the industry under the new administration. What this means for you is there is a rich set of talent that you can be using your partners to obtain. They're available in the market right now. I'm talking about people, like-minded people as all of you, that have worked in service of the safety and soundness of banking industry over the past 20 years. These are people at all levels that thrive on continuous change and improvement. They've built muscle memory around mobilizing quickly to get things done. They know how to translate expectations into action and outcomes, and they can innovate at scale. And in this moment, they're looking to put their talents to use in a different way. Wouldn't it be great if they turned to credit unions as a place to potentially spend the rest of their careers? I'm here to ask you to open your arms widely to these individuals. They're interested in a kinder environment that's community-oriented and mission-aligned. It will offer an energizing and rich landscape for opportunities and challenges for them, and they can spark excitement and energy in the movement and help us all grow better together. So for those of you sitting here that have recently hired an ex-banker or even an ex-consultant that's been in the trenches with those bankers, thank you for being inclusive and welcoming them in. They're not all bad people, I promise you. And those of you who haven't gotten there yet, I do believe now is the time. So I encourage you as leaders to find a way to harness this talent. Let them do what they do best, mobilize and operationalize, and give them the runway and the freedom to effect positive change on your culture. And together, I'm confident that we can find creative ways to think about our relationship with members and the offerings we provide them. And as leaders, in order to meet this moment seriously, there's a high possibility that credit unions could then leapfrog the old, clunky, and tired banking experience that these human resources truly want to get out of right now. So be brave, be bold, hire them at competitive salaries, and then let them get to work for you. Thank you.
Please welcome Scott Hinkle, Principal and Co-founder of Acumen Financial Advantage.
Hello, everybody. I'm Scott Hinkle with Acumen Financial Advantage. I I think I heard some great tidbits that I'm taking away from being together with everybody today. And one of those things was staying relevant. At the end of the day, credit unions are challenged in serving really three different groups of people: serving their members, serving their employees, and serving their community. In our practice, we help institutions with their balance sheet. And really, it's on the kind of the small side, the otherwise impermissible investment world. And what we do in that vein is particularly with communities. That's where we want to focus today. What tools do you have available to make a meaningful change in your community? How would you invest? How should you invest? How should you think about investing? And so where we've seen a resurgence with our credit union clients is really taking advantage of some of the tools that have been available for a long time. Charitable donation accounts are fantastic. Very regulatory, strict environment where you can invest in things you might not otherwise do. And what we've been able to do is see people in institutions that have a much bigger budget. And then the question is, well, what can you do with that budget? That budget is really marketing. It's exposure. It's a way for you to stay relevant, get connected to your community, collaborate with other people within your community. And so we're really excited to see institutions take that first step. A lot of institutions have never even utilized this opportunity in particular. But then with a lot of the institutions that we had up here on the stage earlier, they've taken the next step. They've established foundations. And so we really think organizations should think in two different lenses. What can I do today to make change in the short term? What can I do over the next 100 years? And so we enjoy working with organizations that can think in those ways, because there's lots of tools given the change in the investment environment over the last 2.5 years. I don't have to tell anybody here in the room about the big changes that we've seen from an interest rate and investment environment, but there's a lot of new tools, and we're really excited to be able to collaborate with organizations to make some meaningful change in their communities, because at the end of the day, we don't want to be the best kept secret. We want to be out there, we want to be seen, we want to be heard, we want to tell our story, and we need to fulfill our mission as an industry. So we're really excited to participate and collaborate with all of our credit union clients and meet some new faces today. So thank you very much.
And please welcome Aaron Allen, VP of Insurance Services with Franklin Madison.
Hello, good afternoon. Really excited to be here. I'm going to approach collaboration a little bit differently, and it's with a reminder that we are all in this together. When Beverly said that up here earlier, it reminded me, my kids are in their 20s, of the High School Musical. We're all in this together. We could all do the little dance. But we are, and we are invested in your success. You are invested in our success. And when we are successful as a group, we all win. So I'm going to talk about two different things that we're doing at Franklin Madison that I think are extremely important in the industry. New member acquisition. This is huge. Samantha mentioned it earlier. We just don't have the market share. So we cannot continue to do things as we've always done them. What we did at Franklin Madison is we purchased a direct-to-consumer agency. They're the brains behind LifeLock, Peloton, Noom. They think about member acquisition and customer acquisition very differently. That's the kind of thought that we need going into really is a downtime for us. We have to bring in new members. That's how all of us win. The second piece is embedding services like Amazon does, right? What else are you interested in? You might also like XYZ. How do we embed what we're doing into the process that's already built? It's working with online banking companies. It's working with core service providers. It's working with other platforms to bring additional products and services and activate those new members immediately. So my challenge to you is this. If we are truly looking to work with smaller institutions, we want them to be successful, we want them to win, we need our larger institutions to raise their hands, to say, I'm willing to start this, I'm willing to talk to my core provider, my core processor, my online banking company, to build this. Because once these institutions and once your partners build this, they can offer it to all of those smaller institutions. The only way we win is if we win as a group. We win as a team. We all are in this together. And my challenge to you is to remember When you're a larger institution, you can help those smaller institutions by just raising your hand. Thank you.
And welcome Devin Hughes, VP of Business Development and Lender Partnerships.
All right. Thank you, Zach. I was listening to podcasts like 1.5 speed on the way here because I know he's got his eye on that clock. But great to be here. Thank you to Zach, to Sue. Thanks to Brandy for putting on a great event. I don't need to tell you guys, probably because you've been hearing it all afternoon, collaboration is more than just a theme within the credit union movement, right? It's more of a foundation. And for over 100 years, we've seen credit unions making one thing very clear, which is when we work together, we win, right? And whether it's shared branches, co-op ATMs, you all have been using shared services to bring technology and products to market with a big underlying theme of leveling the playing field. That's something that we found in our business as well. Linkey was founded in 2009. Our founder, Vince Passione, was sitting at a table with a bunch of credit unions in New Jersey, trying to figure out how to solve two primary problems at once. One, coming out of the Great Recession, we had banks pulling out of the education lending landscape. And as always, the other was, how do we continue to stay relevant, stay modern in a fast-paced digital marketplace? And thanks to 40 innovative and pioneering credit unions, we built a platform that has now originated and serviced $8 billion in consumer loans to 400 credit unions across the country. That's more than 200,000 new members to those credit unions. And that's collaboration in action, right? Those credit unions were sharing risk, they were managing liquidity, and keeping that opportunity within the cooperative network. And that network isn't just the education lending program or the home improvement lending program that we support today. We've got exciting new partnerships with folks like Stiefel, Atlanta Postal Credit Union, Patelco Credit Union, Caribou Financial, and we are partnering with them so they can lean on our infrastructure, our expertise to build network lending operations of their own. And here we are again, right? We're at an impasse where we've got now the federal government pulling back on their presence in the education landscape, and we've got a $15 billion gap coming to market as the government eliminates the Grad Plus program. This is a program that's been used by 400,000 degree-seeking students, future doctors, lawyers, veterinarians, and dentists, right? And if we don't step up and fill that gap, somebody will, right? And let's be honest, they're probably setting up those extravagant booths down the hall, right? And so, I think my message here today is pretty clear. It's pretty direct. It's let's continue to do what credit unions have always done best and work together, right? We're excited to partner with Mitchell Stankovich and offer, eliminated implementation fees to get folks into the education lending landscape, no cost till you get to your first loan, and we want to get that out there into market with you all. We're excited to lean in to the next era of network lending and collaboration. Thank you.
And rounding us out, we have Patrick McElhaney from Synaptic AI.
All right, you ready? Give me an A. A. Give me an I. Come on, that sucked. Give me an A. Give me an I. Thank you very much. Collaboration. What does collaboration look like in the future? AI is going to play a big part of it. That's what I feel. That's what our company feels. But you know what? Number one, this is a message to the partners and fintechs out there. Got to get your shit together. I can cuss, right? Fintechs, technology companies, we have to make sure that we are delivering the right solutions credit unions need. No more of this crappy implementation experiences that takes forever where there's mistakes. If you're a fintech and you're a tech company, which we are, we have to make sure that we can deliver. If you can't deliver, shame on you. You shouldn't be doing the business. That's what has to change into the future. That's collaboration. Credit unions, what needs to change in the future? You know what? AI is going to drive the future. You got to be quicker to adopt. All right? Pardon my language, but you guys are slow sometimes, right? The technology train is moving forward. We can't operate like we did in the past. All right? We try to keep doing the things we've done in the past. It's going to fail in the future. That's what collaboration is going to look like. How does AI play into that? Well, we have to make sure we're looking at AI solutions that not just are going to look at lending, that not just going to look at memberships. How can AI identify new communities in our areas. And I mean communities of people that we don't even know exist right now. When you look at what's going on, our nation's changing, demographics are changing. We need AI solutions that are going to look at the communities that are defined, and we need to reach out to those communities and make them members of this fabulous movement that we have. That's what collaboration is about. That is how technology is going to drive success, and that's what needs to change in this organization, in the institutions, this ecosystem. That's what has to happen. Move faster, get shit done, and let's just move forward. Let's not repeat anything in the past. Thank you very much.